Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts for BTC. So yesterday we got a little bit of a draw on the liquidity to the retrace idea and then a bounce thereafter. And we'll see what that means in terms of the liquidity. Now, by going into high block, what is this price action that we have price trapped in? This is a diagonal pitch fan we've had since back here in January, where it respects these levels quite nicely, and it bounced off the 236, and now we're at the in between the 382 and the 286 of this diagonal pitch fan. Can we sustain the move or go back to this level? Let's go ahead and take a look at high block. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's go and do that now. So yesterday we were talking about a retrace into this pool down below at the $149 million mark. We marked it off in the charts, and we'll go and show you that untouched chart in a minute. But at 26,231, we were looking for a reaction or a draw to that zone, and it came back to a T and then started to peel back out from there. Did we know it was going to do this thereafter? No, we did not, but you could have taken a stab either way at that zone. Still an imbalance of $12 billion to the downside here, and pinged in some more liquidity as it rose up into resistance here. So we could see this give it back over the weekend for a double top M pattern event to come back into these lower pools at 25,194 and 25,490 and below. Let's go ahead and expand our vision to the higher time frame. Higher time frame pools of the 7-day time frame. Looks like it could come up. Let's change that to max liquidity. Max. So the max liquidity range here, we do have some draw to the 27K region, a $10 billion pool up to 27.2 that could be retraced into. After that point, you do have a bit of a draw to the downside to the 25.7 range and below, very stacked on the 7-day thereafter. How much do they ping in during that rise up or not is the question. On the monthly time frame, you do have double digits up in the 28.5 and beyond region. If this is sustainable, then you would most likely see a gap with conviction up to that region, as there's nothing in between. Nothing much in between. So if we go to the 3-month and the 6-month, that is where you start to see the pull to the downside getting hotter here, and possibly coming lower to that 23.4 and between 24.4 and 23.4 region. So I'd be looking out for that possibility over the weekend. If we do not, this could be a cat ear within a cat ear idea. On the 6-month time frame, that's 170 billion down at 24.3 to watch out for. On the 2-year time frame does have that nice little pool down at 23.6 to the tune of $253 billion that they could retrace back into. So that's something to note. If they, I would imagine that they would come down to this before coming up to the top position of liquidity up in the 33 region, to say the least. So let's go ahead and go back to the monthly for that double-digit pool up above and down below. The monthly does have that slight imbalance, insinuating the 28.5 region. Interesting to note, do they sweep these highs on the 28K region? Let's go ahead and take a look at the liquidity on the momentum on our Binance chart. Let's go ahead and take a look here. So the projection yesterday, this was the projection. We were talking about this impulse retrace idea coming down to this pool down below at the C. It came down to that to a T and then sharply reversed out. So this projection came to fruition just after the live here and held that range and dropped beneath the 236 to give you that zone. So this is basically played out here up to the 1, bounced off the 1 region and that liquidity pool. So good job on that. Let's go ahead and see what's still going on. We're holding the 236 to the bullish projection that we had coming out of here. This impulse retrace idea, impulse retrace, still holding this zone at the 236 zone. So that means you could come up into this region if we hold that 236 at 26,150. It's all if-then statements. We've been holding it, so we went up here, then we started to see this fatigue, so we saw this draw to the downside. And now, where do we go? Let's go ahead and throw on our oscillators. And heads up display on. Link in the description for more. Scroll down to features, toggle everything at your leisure. This is the bottom of Bitcoin before we knew it was the bottom at 15K. You can see all the components and read about them as you like. So as of this moment in time, you're getting 5 time frames overbought. What does that mean? Well, Most likely with the diamond and the X here, it says a majority of time frames, so that means your 22 is overbought now, and these 12 and the 6 and the 4, all of these time frames overbought. So let's go ahead and throw on the regular momentum master here. The 22-hour time frame extremely overbought on the stochastic. The Williams doing what we said it would, which is having the average come up to the Williams level for a potential bounce off of that up in this overbought region. This is what gives you that suppression on the stochastic RSI, which is why we add the Williams down below here, also a negative value indicator, so it doesn't compete with the domain for the stochastic RSI, which is nice. 12-hour also being that draw that suppresses the stochastic here, and you're getting the KD lines, not the KD lines, the base lines holding open strong here on the 12, and the cloud is oddly insinuating that it's still going lower after this bounce up. So you're getting some offloading of volume despite bouncing here. This is some incongruence here, which is odd, but most likely delayed. So this is going to start to shift at some point like that if it does continue. Looking at the 6-hour baseline starting to come together here in price action, reaching into the weighted moving average with 3 wicks into that weighted moving average, expressing a slight fatigue into resistance here. If we go to the 6-hour oscillator here, coming back to the 50 level, the Williams coming tight for a potential alarm event. If it does decide to retrace down, it will give you that alarm signal. Doesn't mean it needs to occur immediately, but it is at a resistance level. The previous time we were there on the 6-hour, we got a huge rejection, boom, and then continued to the downside. So is this a similar rejection off the weighted moving average? I'm not sure. Getting the 4-hour to potentially reset the stochastic, but this could just turn into another down, up, down, kind of last leg down idea for that double top event. The Williams also opened up here. Does it continue to drop down further? Money flow and RSI and all across all of these has been even Steven together, no disparity, so haven't pointed out anything on that just yet. Previously on the hourly time frame did have some bullish divergence on the money flow here. Start to play out, getting some vector candle volume on that last hour 2 hours ago, and getting into that 0.65 of that bullish trend base fib level rejection for the second time. 1, 2, 3, actually 2 wicks, three wicks, so this is 3 attempts at that zone. The hourly cloud looking to have a slight fatigue here on this curvature. So if we were looking at the opposite case, you'd be looking for this essentially to have held, which it did not. So the fact that it came back above the cloud, suggesting that this could be a bearish retest to come lower, perhaps. In this case, it's going higher. So this bearish retest of the cloud is thinning, but this could be a retest off of the cloud. 15-minute resetting in a manner here, starting to get noisy as you go to the lower time frames. So where to look on the hourly time frame? So you've been seeing these 2 time frame bounces when you get these alerts to your phone using the dynamic alert system here. The two alerts, the 2 and the 3 lower time frames have been sending it in this bullish manner every time you reset 2 or 3. So if we get another green dot in terms of the 2 or 3 time frames oversold, and you're maintaining this 236 level at the 26,150 region, you could be seeing a little bit another hit, possibly higher here. You do have that draw to 27K, which we had put out a while ago, which we still have not hit over here at the 786 level, dropping down. Okay, so let's go look at what the dollar did in terms of rising up. It came up to that fair value gap region that we outlined in the beginning of the week, I believe. Came down and oversold 5 time frames and shot back up for that triple bottom rise and reclaimed this gap from over here. So the dollar making a surge as NQ and a bunch of others take a turn to the downside as profit options expiration and people trim on their profits. You had a nuke here on Friday morning that played out on the NASDAQ. Second time the nuke has played out here. Highly accurate for these assets as well. We go into the 15-minute. You can see that there was basically the top with that nuke event playing out here, leading into the open. Had that massive sell-off on NASDAQ, which turned into the push up here on the dollar. So they trimmed their assets and plugged it into the dollar. So does Bitcoin see a little bit of a surge here? The cloud is mighty thick on this 15-minute. The 3 vectors that you had with the stop hunt volume candle, the volume is tapering here as we start to go up. So we did have 3 vectors on this. We had 1, 2, and 3. 3 green vectors plus a purple stop hunt candle. That is generally how they run the the pattern. So 3 plus that 1 stop hunt into the 706 level. Does this cascade higher? Does this 6 time frames oversold start to come down, or are you going to see a 2 time frame bounce to the upside over the weekend? Low liquidity weekend means draws and manipulation are rife. If you're still in your long, you could just keep it at the 236 level here at the 26,150 region. It's been serving well thus far. Inside this impulse retrace is all that math contained within, so you can just trust the math for what it's worth. The one thing about the cloud here shifting, if you break below that 26.5 region, coming below it doesn't seem like an impossibility. All of the liquidity on the 1 minute suggests that $12 billion imbalance get requited down below. We do have that 25.712 region stacked up quite nicely. 25.712. 25.712. Let's go ahead and mark that off. 25.712. There we go. So there is a draw of liquidity down here to possibly come into. This would be the equilibrium zone of this impulse, but if we go ahead and adjust this, because it has gone up higher since then, so we can move this up to the top here and then basically move this into a pocket. That would would put you in the 618 retrace of this entire impulse up. So retracing at some point in this regression trend to the upside, you're seeing this kind of rejection off the mid level here perhaps, and then if you get suppressed here coming down into these regions. Not as clear of a signal as it was yesterday. Hourly time frame still opening up here with the rising sun event could push this a little bit higher on the hourly. The liquidity on the 1 minute does not suggest that though. The 1 minute liquidity was grabbed and coming down into these little pools below seems to be the draw, but there is that one little bit of happiness up at the 27K region that we were talking about, and the liquidity on the 7-day does have that draw up there as well, that $10 billion up in this region. So do you make one last stab up to the 27K region and start to retrace into the liquidity? That could be something you see here with this Williams suppression idea, giving those last legs to the upside. Let's go ahead and see how the 3-day closed. I remember I was talking about the 3-day and the cross up event that we would see on Saturday. So let's go ahead and see what the 3-day did. So the 3-day did cross up and give that lock-in of the cross up event. The last time we saw a cross down signal, we had that back in July 24th with that drop to the downside. So are we going to see the same with this cross up event and this holding of the price action, suggesting we go higher? Interesting to note, this could be the draw that takes you up into that 28K region. We'll leave the pool there as it is for right now, but you could be seeing some sort of double bottom idea to this region. Not really seeing the liquidity match up with that though, but that is what the 3-day time frame insinuates with this cross up event. Cloud on the 6-hour is still thick in a manner here. Our cloud starting to shift ever so slightly. Super trend 3% down from here. If you go down to that region to snag the liquidity. So this 15-minute and this hourly in this range here. So we're in this kind of range bound zone here in between those two zones of the adaptive and the cloud. If you break beneath the cloud here at 26.5, then you look for that bearish retest down into these regions and below. Does it cascade and suppress off this cloud or not? Here. Just seeing this 5 time frames overbought plus this cloud, and seeing that we're coming into the resistance levels of the 706 for the third hit there with the power of 3s, and having that draw to the liquidity to the downside, we could be seeing more of a retrace down into this level to sweep these pools if the move to the upside is sustainable. This kind of rising wedge price action is meant to squeeze the shorts and scare them out, and also induce the longs to take their liquidity. So we're just looking at the liquidity here and seeing that there's that draw to this region on top of the momentum. It's looking like it's fading on the 1 hour. Now the key level is that 26.5 region. Can you maintain this 26.5 or not? It looks like the liquidity grab to stop out the shorts here that entered, the thick pools that entered there, was also inducing some longs, so coming back down into that region makes sense to me at this time. Coming to the 4 hour. 4 hour has the cross down event with the double top idea. Coming back to at least kiss the cloud region makes sense too on that idea. Having this weird point of takeoff doesn't necessarily make sense. We want to see this round out down below. Doesn't mean it hasn't happened where it takes off from that region at the 20 level. Williams is overbought though, and you could see this easily dump back down, suppressing this stochastic from takeoff. Same with the 6 hour getting close here, so the 6 and the 4 hour could suppress the lower time frames here. If we go to the 8 hour, the 8 hour also in that zone, the money flow above the RSI on the 8 hour, insinuating some money flow fatigue. So we're looking for a little bit of a retrace here. We're going to observe how that happens on the hourly time frame, see how the hourly reacts to that cloud. Do we bounce, break down at the cloud here and attempt to bounce back up and reject and see this angle come to fruition where it continues purple in this manner? Got both sides projected either way. Got to have a game plan for both. And yeah, that rocket ship was pretty interesting. The rockets, baby. Be your own guru. And that's it. That's my story, and I'm sticking to it. Thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part. Please enjoy your weekends with your family and